Many people who owe back taxes seek options such as an offer in compromise. If you want to file for an offer in compromise, you need to make sure you meet the IRS offer in compromise pre-qualifier standards. In this video, we go over these non-negotiable standards. What is it? An offer in compromise is an agreement between the IRS and the taxpayer to settle the taxes owed. This settlement involves a reduction in the amount based on qualifications. Not all applications for an offer in compromise get accepted. The IRS accepts close to 40% of applications. If the IRS accepts the agreement, you're allowed to set up a lump sum payment or an installment agreement. You have up to 1 year to make all agreed upon payments. IRS calculator. The amount required for an offer in compromise payment gets decided based on the reasonable collection potential. You must offer an amount equal to or greater than this reasonable collection potential. This amount gets calculated based on your complete assets added to the potential ability to pay in the future. Assets include income, on-hand cash, and investments, as well as savings and available credit. Your current level of debt also goes into the calculation. The IRS also takes standards of living expenses into consideration. Any payment plans made need to allow you to pay for the necessary expenses for everyday living. The calculation. This calculation determines first if you qualify for an agreement. The calculation helps prove your back taxes can't get paid any other way. The calculation also determines how much your agreement involves. This will decide the minimum amount you must pay with an offer in compromise. It also determines the initial payment you should send with the application. Pre-qualifier standards. The IRS website has an offer in compromise pre-qualifier quiz available to check whether you're able to apply. This will help you determine if you meet the qualifications before gathering the necessary documentation. You need all the documentation in order to apply. Any missing information will cause the IRS to reject your application. Standards to apply. There are 3 ways to qualify for an offer in compromise. The reasons for acceptance include proving a doubt that the taxes are collectible, proving a doubt of the exact amount owed to the IRS, and that collection could cause hardship to the taxpayer. The most common reason for acceptance involves a doubt that the taxes are collectible. You must prove that your assets and income available didn't cover the debt owed. You also must make sure you have filed all your tax returns on time during the period when you seek an offer in compromise. You also must ensure you make all payments for up to 1 year. Plus, if you're a business owner, all deposits must get paid on time. Qualifications with application. To qualify, you need to provide info about your complete financial situation. This includes cash, investments, savings, and all assets available, as well as income, available credit, and debt. New qualification terms allow you to include student debt and local taxes in your current debt financials. You will also need to include all average income and expenses for the full household. You can also include any explanations about your full financial situation in the application. Whether you need help with the IRS offer in compromise pre-qualifier standards or you need help with an audit, you can contact a tax professional to work out the best options for your situation. If you need help with a tax issue, contact us to talk with a tax attorney. And if you enjoyed this video, be sure to like, comment, and subscribe.